Is the housing market going to crash? Much of the jargon of would-be home buyers, property prices just keep rising. It seems nothing, not even the highest mortgage rates in nearly 23 years, can stop the continued climb of home prices. Prices increased once again in July, according to the latest S&P Core Logic Case Sheila Home Price Index, with 19 out of 20 market measures show month-over-month gains. In another reflection of ongoing increases, the National Association of Realtors (NAR) for short report that median home prices as of September were up nearly 3% over last year, the third month in a row of year-over-year gain. So much for the idea that a housing recession would reverse some of the outsized price gains in homes. The U.S. housing market had finally started slowing in late 2022, and home prices seemed poised for a correction, but a strange thing happened on the way to the housing crash. Home values started to rise again. Now, NAR data shows that median sales price of existing homes are near record highs. September 2023's median of $394,300 is of the all-time highs of $413,800, but it's the highest ever for the month of September. Seasonal fluctuations in home prices make June the highest price month of most years. The housing recession is essentially over, says Lawrence Yun, NAR's chief economist. Home values have held steadily even as mortgage rates have soared to 8%, reaching their highest levels in more than 23 years. The culprit is a lack of housing supply. Inventories remain frustratingly tight, with NAR September data showing only a 3.4 month supply. You're not going to see house price decline, says Eric Avilo, head of mortgage firm New American Funding. There's just not enough inventory. Skylar Olson, chief economist at Zillow, agrees about the supply and demand imbalance. Her latest forecast says home prices will keep rising into 2024. Welcome news for sellers, but not so great for first-time buyers struggling to become homeowners. We're not in that space where things are suddenly going to be more affordable, Olson says. In fact, lately we've seen quite the opposite. According to Realtor.com's September 2023 housing market trend report, high mortgage rates have increased the monthly cost of financing the typical home after a 20% down payment by 12.4% since last year. That equates to $256 more in monthly payment than a buyer last September would have seen. Buyers still struggle with a triple threat of rising listing prices, record high mortgage rates, and the limited inventory, making affordability a continued concern, Realtor.com's chief economist Danielle Hill said in a statement. Now, taking all this into account, housing economists and analysts agree that any market correction is likely to be a modest one. No one expects prices drops on the scale of the decline experienced during the Great Recession. Is the housing market going to crash? Well, the answer is no. There are more buyers than sellers, and that means a meaningful price decline can happen. There's just generally not enough supply, says Mark Fleming, chief economist at title issuer First American Financial Corporation. There are more people than housing inventory. It's Econ 101. Dave Leiniger, the founder of real estate brokerage RE/MAX, says the sharp rise in mortgage rate has skewed the market. Many would-be buyers have been waiting for rates to drop, but if mortgage rates do decline, then new buyers could flood into the market, pushing up home prices. You've got an entire generation of pent-up demand, Leiniger says. We are in this fascinating position of tremendous demand and too little inventory. When interest rates do start to cool down, it will be another boom and bust cycle. Back in 2005 to 2007, the U.S. housing market looked downright frothy before home values crashed with disastrous consequences. When the real estate bubble burst, the global economy plunged into the deepest downturn since the Great Depression. Now that the recent housing boom has been threatened by skyrocketing mortgage rate and a potential recession, Bankrate's most recent expert survey puts the odds at 46%. Buyers and homeowners are asking, when will the housing market crash? Now, key housing market statistics. According to Bankrate's weekly national survey of large lenders, the average mortgage interest rate on a 30-year loan was 7.99% as of October 18, the highest level since August 2000. Home sales fell 2% from August 2023 to September 2023. The National Association of Realtors says the decline since September of last year was 15.4%. The national median sale price in September 2023 was $394,300, the highest September median NAR has ever recorded. September saw a 3.4 month supply of housing inventory, well below the 5 to 6 months needed for a healthy, balanced market, one that favors neither buyers nor sellers. Realtor.com's September housing market trend report showed that the number of homes for sale in the country's 50 largest metro areas was down 8.9% year over year, with those markets combined inventory a huge 4.9% below pre-pandemic levels. A total of 33,952 U.S. homes had foreclosure filings, default notices, scheduled auctions or bank repossessions in August 2023, according to the latest numbers from Atom Data Solutions. Now that's down 2% year over year. Nevada had the highest foreclosure rate of any state in August at one foreclosure filing for every 2,224 housing units. However, housing economists agree that it will not crash. While prices could fall, the decline won't be as severe as the one experienced during the Great Recession. One obvious difference between now and then is that homeowners' personal balance sheets are much stronger today than they were 15 years ago. The typical homeowner with a mortgage has a stellar credit, a ton of home equity, and a fixed-rate mortgage locked in at a rate of below 5%. In fact, according to a recent Redfin study, 82.4% of all current homeowners are locked in below the 5% mark. What's more, builders remember the Great Recession all too well, and they've been cautious about their pace of constructions. The result is an ongoing shortage of homes for sale. We simply don't have enough inventory, Yoon says. Will some markets see a price decline? Yeah, but with the supply not being there, the repeat of a 30% price decline is highly unlikely. Existing home prices. Well, economists have long predicted that the housing market would eventually cool as home values become a victim of their own success. But after decreasing year over year in February for the first time in more than a decade, the median sale price of a single-family home is on the rise again, with a 2.8% yearly gain in September, according to NAR. Overall, home prices have risen far more quickly than incomes. That affordability squeeze is exacerbated by the fact that mortgage rates have more than doubled since August 2021. Experts say prices to hold strong. While the housing market is indeed cooling, so to speak, this slowdown doesn't look like most real estate downturn. Despite prices being high, the actual volume of home sales has plunged, and inventories of homes for sale have fallen sharply too. Homeowners who locked in 3% mortgage rate a couple of years ago are declining to sell, and who can blame them with current rates hitting 8%. So the supply of homes for sale is even tighter. As a result, the correction will be nothing like the other collapse of property prices during the Great Recession, when some housing market experienced a 50% cratering of values. We will not have a repeat of the 2008 to 2012 housing market crash, Yoon said in his September statement. There are no risky subprime mortgages that could implode, nor the combination of a massive oversupply and overproduction of homes. Ken H. Johnson, a housing economist at Florida Atlantic University, says the housing market is being pulled in two compelling directions. I think we are in for a period of relatively flat housing prices performance around the country as high mortgage rates put downward pressure on prices, while significant demand from household formation and inventory shortage place upward pressure, he says. These forces for now should balance each other out. Also, he said, now 5 reasons there will be no housing market crash. Housing economists point to 5 compelling reasons that no crash is imminent. Inventories are still very low to be number 1. Now, the National Association of Realtors said there was a 3.4 month supply of homes for sale in September. Back in early 2022, that figure was a tiny 1.7 month supply. This ongoing lack of inventory explains why many buyers still have little choice but to bid up prices. And it also indicates that the supply and demand equation simply won't allow a price crash in the near future. Number 2, builders didn't build quickly enough to meet demands. Home builders pulled way back after the last crash, and they've never fully ramped up to pre-2007 levels. Now, there's no way for them to buy land and win regulatory approvals quickly enough to quench demand. While they're building as much as they can, a repeat of the overbuilding of 15 years ago looks unlikely. The fundamental reason for the run-up in prices is heightened demand and a lack of supply, said Greg McBride, Bankrate's chief financial analyst. As builders bring more available homes to a market, home builders decide to sell and prospective buyers get priced out of the market. Supply and demand can come back into balance. It won't happen overnight. Demographic trends are creating new buyers. There's strong demand for homes on many fronts. Many Americans who already own homes decided during the pandemic that they needed bigger places, especially with the rise of working from home. Millennials are a huge group, and in their prime buying years, and Hispanics are growing demographic also keen on home ownership. Lending standards remain strict. In 2007, liar loans in which borrowers didn't need to document their income were common. Lenders offered mortgages to just about anyone regardless of credit history or down payment size. Today, lenders impose tough standards on borrowers, and those who are getting a mortgage overwhelmingly have excellent credit. The median credit score for mortgage borrowers in the second quarter of 2023 was a stellar 769, the Federal Reserve Bank of New York says. If lending standards loosen and we go back to the wild west of the days of 2004 to 2006, then that is a whole different animal, says Mark Bright. If we start to see prices being beat up by the artificial buying power of loose lending standards, that's when we worry about a crash. Foreclosure activity is muted. In the year after the housing crash, millions of foreclosures flooded the housing market, depressing prices. That's not the case now. Most homeowners have a comfortable equity cushion in their homes. Lenders weren't filing default notices during the height of the pandemic, pushing foreclosure to record lows in 2020. And while there has been an uptick in foreclosure since then, it's nothing like it was. Now, all of that adds up to a consensus. Yes, home prices are still pushing the bounds of affordability, but no, this boom shouldn't end in bust.